Hi, good day everybody. This is V3Go Connect trading video 10th of July 2014, our third video. Now today the topic will be the Dow Jones outlook for the second half of 2014. I'm the speaker, Kelvin Han, V3Go Academy Chief Trainer. Allow me to say this first. Disclaimer as usual, alright? And this is my personal biography. Take a look then. My trading philosophy is trade to win and not trade to trade. Well, personally, I went through the school of hard knocks over the past 10 over years, and I had my fair share of ups and downs in life. Personally, I am quite well covered by the media because of one of my biggest prediction that I had back then was when gold was at 1,400 and I predicted gold will hit 1850. And when it hit there, I tell many people to get out of gold, and gold really slammed down to below 1,300. But today is not about gold. Today is about the Dow Jones. Now, many people have been asking me that where and how high the Dow Jones will go. I gave three figures recently, and one of them was 17037. So allow me to explain how I get this number. First of all, we need to go back to history. Now this is the Dow Jones back in 1996. As you can see, it escalated its movement from 1996 all the way to about 1999, where the highest point was 11,663. And interestingly, when it lost 20%, it began to trade lower, and you can see that it went all the way down by 37% to a low of 7,294 in 2001. 5 years later, it began to move higher and higher, and eventually broke the previous high and up by 21% from this point here to the high of 14,198. That was where the highest point in 2007 before the CDO crisis came in, and the market again lost 20%, go to bear territory, and slammed 54% to hit a low of 6469 in 2009. Interestingly, 5 years later, the Dow recovered, and this time round it went past 14,198. And this is what things happen. Usually when the market is down by 20% from the highest point, we call it a bear territory. So on the flip side, if the market times by 1.2 or 20%, you should be seeing a bull market. And normally at those times whereby everybody thinks that is time to go in the market, usually that is where the market sells. So using the same concept, I take 14,198 times by 1.2, I get this figure, 17,037. Now this chart, as you can see, that I created was back in 2013. And back then, the Dow Jones itself, right, was a mere 15,500 to 800. So there was no charting above 16,000. So that means that this chart itself is more than 1 year old. And I've been telling people this, if the Dow is to go higher, it could really hit 17,037. And we all know the fact is that now the Dow highest point recently, about a couple of days ago, was 17,074. So where can we go now from here? Let's take a look now. Now you can see that this is the Dow Jones chart over the last 6 months or so. Now each time the bounce seems to get smaller and shorter, as you can see. So we have a couple of bases to take out. The first base from the right will be 16,746. Now this level must hold water. If the Dow do go down and breaks below this figure and fail to stay above this base, the Dow may really go further downwards to find 16,341 and then 16,015 and last of all, 15,340. Now you can see on RSI indication itself there's some divergence in the market. So we are looking at this figure very closely. 16,746 should be the first support for time being. But if the market do break this trend line, this could spell trouble ahead. So players, watch out for this very important trend line. Hopefully it stays. Now, what I did was something more to show to my students. Now you can see that this is the Dow movement since 2013, and you can see the movement is big, is strong, and very powerful. And that probably is because this area here was still moving at $85 billion of free money from the federal. Hence, it's an exponential growth here. But if you now look carefully, ever since start January or December, you can see that the Dow began to move in a smaller, tighter range. And that primarily due to the QE has started to reduce by 10 billion per month or every time when the FOMC they meet for FOMC. So although the upside continue, but there's a very visible tapering across the board, and you can see from this chart alone. You can see that from this chart alone. So we can see that for the past 18 months, there was actually a strong relationship between the QE and the Dow. But recently, we can see the tapering effect is actually kicking in, although the potential of more upside is there. So based on some maths, I came out with this figure, 17,037 to 17,179. And I do foresee that we're gonna have QE ending by October and probably interest rate hiking by December. So if this is going to be true, then this level here, this support level here must stay. Now, if the market do lose this 16,500, right, I do foresee quite a severe pullback below 16,000 in the next 6 months or so. So traders, you really have to watch it. And for tonight's special, or today's special, I put it this way, because it's night time for Singapore now. Now this is for today S&P 500 10th of July call. Now we can see very clearly now the market have broke the trend line that it came from May. And this is going to be drastic. If the market can't hold 1954, the market will break all the way down, likely chance to 1926. So there could be a 30-point drop these 2 days if the market just can't hold above 1954. Now, if buyers want to come in, then watch out. The market must break this moving downward trend line, or we call it as a LHF. All right, it must break this LHF. If it breaks, yes, the market may challenge back above to 2000. But if the market can't and goes down, then 1926.50 could be a level to watch. Okay. At the moment now, the market is trading below our div SL, which is actually telling me that the selling pressure is actually in the market. So if you like what I say for today and you want to contact me via info@v3go.com for more details. With this itself, I thank you very much. Take care. Have a good day.